When we look at political and regulatory forces, we'll find that they can be either a hurdle or they might present opportunities for us as entrepreneurs. So we're going to look at these two forces in the context of macroeconomic change and think about how we can use these to our advantage in the creation, launch, and growth of our new ventures. When we look at political and regulatory, that's going to round out our discussion of the macroeconomic change element of the opportunity analysis canvas. So to define these terms, what we're talking about here are factors that are related to how the government, and that may be the local, state, federal, or even some measure of international laws, may influence economies or industries. Examples of these include tax policy and fiscal policy, various laws regarding business law and labor law and environmental laws, as well as things like trade tariffs and political stability or instability. An example of these laws is crowdfunding, and this is something that's attracting a lot of attention in the US and Europe and other areas as well. Now, you may be familiar with terms like crowdfunding that are sometimes interpreted and applied to Kickstarter and Indiegogo and other platforms that are not really investment in nature. What happens with Kickstarter, if you're not familiar, is that you may go on and pre-buy a product. Companies engage in pre-sales, meaning they're going to sell a product, and it may take them 3 months or 6 months to deliver on that product. They may give you as a buyer a little bit of a discount as an incentive for you to be patient with that delivery, and they may need that funding that you have contributed for them to build the product and deliver on that. What we're talking about with crowdfunding is a bit different. We're talking about investment in this context. And what we mean by investment is different than buying a product or contributing to a product and receiving a thank you gift like a t-shirt or a mug. What we mean by investment is that you receive equity, stock, ownership in that company if you're going to put in money. The element that makes that a little bit different is that in most countries that's illegal to go online and try and raise money from individual investors unless you have the proper vetting and unless you have the proper certification from organizations, federal organizations in most cases, like the SEC in the US and its parallels in other parts of the world as well. What we're going on in the space is that there are thoughts on how do you evolve that and expand it and go beyond accredited investors. What an accredited investor is an individual that has a net worth of over $1 million outside of their equity in their primary residence, or someone that has annual income in excess of $200,000 for 2 consecutive years, and those are the terms that are in the US. What we're seeing with the 2012 Jobs Act is there are thoughts on changing those laws. There are laws that are already beginning to take effect, such as the number of individuals that can participate in funding a startup, of raising that from 500 to 2,000. But the bigger piece of that is lifting this general solicitation ban tied to accredited investors. And what that means is that if this passes, that you and I as individuals, even if we're not high net worth, even if we have lower income, and even if we're not millionaires, can go online to a site like a Kickstarter and invest in startups. And we might be able to buy a small percentage of that startup. Maybe it's 0.5%, maybe it's 0.1%, for a few $100s. What we see here is that it allows that equity crowdfunding to take shape, and is perceived to be a bit of a game changer in the market if it takes hold. Now, what we presently see in the market are companies like CircleUp and others that present opportunities for the accredited investor, for the higher net worth individual to invest in entrepreneurs. And so for this platform, as an investor, I can go on and I can identify companies that are looking to raise money. And I can learn a little bit about the company and their technology, what their success and what their ambitions are. And I can elect to make contact and register as an investor and certify that I'm accredited. As an entrepreneur, I can use CircleUp to go and present my opportunity and build a profile for my company and give some indication of how we're doing and what we would like to do and what we need money for. And so with CircleUp, it's a platform that connects these investors that are accredited, that are high net worth, with these entrepreneurs. So if the bill takes shape and if we are successful in being able to amend the definition of an investor and let smaller individuals, smaller net worth individuals participate, it's going to naturally grow the pool of capital that will be available for these entrepreneurs. When we look at this concept of equity crowdfunding and being able to lower the hurdle for investors and make it more accessible for lower net worth individuals to participate in funding companies, there is some level of skepticism and cynicism and concern about the space. The primary element is what's to stop entrepreneurs from fraudulently raising money. What's to stop someone from going on and making false claims and collecting money from individuals with no real desire or expectation to use that money as intended? So for the individuals that are opponents of this, there are concerns about consumer protection and the protection of the individuals that will be used to fund these new ventures. Now, what's going on in Europe and other areas is that there are various examinations or certifications or credentials that are outside of the worth of an individual, but that do give some measure of light or understanding or education on the risks that they are taking. And for individuals that pass these certifications or have these credentials, they are able to invest in startups, even if they don't meet the net worth criteria that we have here in the US. So when this comes to bear, one, we'll see if it happens. If it does happen, I would expect there'll be some measure of certification or examination of the investors to make them fully aware that investing in a startup is a risky proposition, riskier than the stock market, riskier than most other types of investments they've probably made, and that they want to be well informed in what they're doing. A different side of the political and regulatory factors is viewing government as a customer. So here in the Washington, D.C. area where we're based, this is a very common thing. What we see for government is that they acquire goods and services, and they are looking to promote the opportunity for individuals, to include small companies, to provide goods and services for pay to the government. What we see in this category is that it happens often in healthcare, in education, in infrastructure, bridges and roads and things of that nature. And we see that there are various federal agencies that will post these opportunities in the U.S., and I expect in other regions of the world as well, that let entrepreneurs share in being a service provider to the government. What we see here from the Department of Education are a variety of grant opportunities and funding opportunities, many of which might have set-aside funding, meaning reserve funding, for small businesses, for women-owned businesses, for minority businesses, and other special categories that give a broad opportunity, particularly for entrepreneurs and small companies, to play a role in providing goods and services to the government in a variety of different ways. This, again, from the Department of Education, but we see similar things from the various other departments and the various other entities that we have at the federal level within the U.S. So in summary, we want to understand political and regulatory factors from a few different perspectives. One, we want to know how the laws impact the businesses that we're in or that we may enter. We also want to think about government as a customer and where opportunities may emerge. We also want to build an awareness of these political and regulatory changes and forces. What this does is it allows us to prepare and to anticipate and to position ourselves to be successful, or to amend or think differently about what we're doing, rather than falling victim to something that we may read in the newspaper or that we may learn about after the fact.